While some experts claim that a good education is priceless, today's graduates find themselves unable to save for a house, pay their bills, or start a family because of their student loans. The average student loan debt in the United States is $37,113. According to the Education Data Initiative, with this information, it is clear that you're not the only one having trouble coming up with a repayment plan. If you are struggling, you are not alone. Welcome to Money Talk, where we discuss tips on making money. And for this video, we are going to provide you 7 easy ways to pay your student loans and finally free yourself of them. But before we begin, don't forget to hit that like button, hit subscribe, and click that notification bell to receive updates and be the first to check out our latest videos. Paying down your student loans more quickly and efficiently can be done in various ways. Let's start with the first one. Start a side hustle. You can go for Lyft or Uber and become a driver, or deliver food and other stuff to earn money. You can also sell your stuff on eBay to help pay off student loans. You can auction off your things to try to enhance your earnings. With Facebook Marketplace, you can connect with interested buyers from around your area to sell things. You might be able to rent your home or apartment to make extra money if you own it or rent it. You might be able to make extra money by letting guests who have been checked out to sleep on your couch or stay at your place while you're on vacation. These are just some of the examples you can do to earn a little money you can use to pay your loans. However, it's still your responsibility to focus on paying your debt. Create a budget or other plans to direct more or all of your side hustle revenue toward paying down your debts. After paying off everything, you can either quit your part-time employment or spend the extra money to celebrate your success. Or maybe these side hustles can bring you wealth. Who knows? Second, find out if you can get a discount for paying on time. Many people use the Autopay feature of their bank accounts to pay off their student loans on time. This makes it less likely that you will forget to make a payment, which benefits both you and the lender. Sometimes, private lenders may offer cheaper interest rates to customers who participate in Autopay. You may be eligible for a monthly payment discount of between 0.25% and 0.50%. However, you should not assume that all lenders offer this service. Inquire about your eligibility and compare interest rates depending on the included reductions to get the best refinancing plan for your student loan debt and financial objectives. Third, pay your bills every 2 weeks. The majority of student loan payments are made once a month. Rather than paying the minimum, strive to make extra payments throughout the month. Creating a bi-weekly payment schedule for yourself may be a convenient method to include extra payments into your budget. It's worth nothing that some lenders may charge fees if you pay off your loan too quickly. This is especially useful if you are paid bi-weekly. Pay down your loan by setting aside a portion of each paycheck in advance. The amount of interest you pay throughout the life of the loan can be reduced by making bi-weekly payments, even if this means taking money away from your monthly budget in other areas. At number 4, make use of your tax refund. For many college students and recent grads, a tax refund is an unexpected windfall that isn't accounted into their annual budget. In 2021, the average tax refund was $2,815, according to the IRS. According to the Education Data Initiative, the average monthly payment on a student loan is $460, so this extra money might be used to pay down more than the minimum. This method only works once a year, but it's a practical choice that won't strain your finances or needs consistent savings weekly. However, you might not get a tax refund for thousands of dollars. If you work as an independent contractor, you might not even get a tax refund. With the help of your accountant, look into tax benefits and other tactics to determine whether you can lower your tax obligation or possibly qualify for a refund. And since we're at the topic of student loans, if you're a student struggling with it right now, let us know your stories and how you guys are coping. And if you already paid yours, perhaps you can share some tips and advice in the comments. And while you're at it, don't forget to subscribe to our channel. Now, back to the list. Number 5. Figure out student loan forgiveness and related alternatives. Imagine receiving full or partial forgiveness of your student loan debt. Student debt forgiveness programs have stringent eligibility conditions, even though this may appear to be one of the most innovative and interesting methods to repay student loans. Also, only federal student loans qualify. According to the Federal Student Aid, here are good ways to discharge or forgive your student debt. Teacher loan forgiveness, discharge in bankruptcy, public service loan forgiveness, total and permanent disability discharge, Perkins loan cancellation and discharge, fall certification discharge, unpaid refund discharge, closed school discharge, discharge due to death, and borrower defense to repayment. Number 6. Refinance your student loans. Refinancing your student loans can be done with your current lender or a different one. One important thing to consider is whether your loans are federal or private. When you refinance, you usually take out a private loan that combines your current federal and private student loans into a new loan. Often with different terms and rates, you might be able to save money by refinancing your student loans, depending on how much you pay in interest and how much you pay each month. Most of the time, this strategy only works if you have a high credit score. Look around different lenders to see if you can get a new loan with better terms or lower interest rates. To ensure you're getting a better deal, you should ask about available loan terms, current interest rates, minimum estimated payment amounts, and any fees, terms, and conditions that apply to refinancing. Sometimes you may require a co-signer to get better terms and lower interest rates, depending on your credit score and other circumstances. And finally, at number 7, pay off your debt while attending school. Start paying off your loans while you are still in college. This is another way to pay off your loans faster than the minimum payment plan. Federal loans and certain commercial lenders do not force you to make payments while still enrolled in school. While some college students earn just enough to meet their basic living expenses, others can begin making payments as soon as they have completed their studies. Utilize your time in college in innovative ways. Consider part-time work on campus or side hustles if you have idle time during the day. This could help you earn money that could be utilized to make debt installments before you graduate. You also might want to make a budget that helps you find extra money to put toward your debt. Remember that you can't pay back any federal aid you got through the FAFSA while still in school. Nobody enjoys repaying student loans. It can strain your finances and prevent you from reaching your financial goals. But for some individuals, their primary financial objective is the quickest repayment of student loan debt. Paying back student loans can be a difficult undertaking. It is essential to recognize that paying for college requires consistency and financial stability, and that finding the appropriate repayment plan will make a significant impact. If you enjoyed this video, make sure to hit that thumbs up button, click subscribe, and hit the notification bell to receive updates on our latest videos. Also, feel free to leave us a comment. If you want to watch more videos, head on over to our channel to see more from Money Talk. See you!